Welcome back to the Flow Zone channel. Don't go anywhere. In this video, we are going to talk all things for SPY and more in particularly the SPY futures. Where can they go next? So in this video, I'm going to go over where I think we can possibly extend to, where I might be looking for pullbacks, and where maybe, just maybe, we might get a little shift for that move downwards. Because until this week, we have had overhead supply. All-time highs were sat there. There were some clear levels of supply, but now very clearly we have broken out and there is absolutely nothing above head, which means we need to look at the market differently. There's no supply above head. You cannot just be shorting, hoping that we're going to roll over. You need to be smart about this, which means you need to be thinking about the amount of legs the move is going to do and where your potential Fibonacci pivots might be, and also where standard deviations might be. And that's what I'm going to go over right now. So to start things off, let's just start with a monthly, shall we? That's probably the best bet here to start off with. And as you can see, on the monthly, we are pumping up. Now, you might be looking at this chart specifically thinking, why does this look so different to how it has the other weeks? And that's because I've taken the adjustment off. Okay, this adjustment is to include future repricing. You'll notice when we roll over with futures, there's often quite a big discrepancy in the rollover price. It used to be only a few points, but more recently it's been more like 20, 30, 40 points, and it makes a big difference. So this is how you can toggle that. So the first thing I've done is just measured out these old inflection points where there would have been some overhead supply. And I'm going to show you why I've done that shortly. Flick back over now into right here. There we go. So that is without the adjustments. And as you can see, we've broken out just like we have on the ETFs, all-time highs. No overhead supply, but I have left these two marks in as adjustment areas. So the first thing we're going to think about is where can we extend to? Now, there's a few different ways we can do this. The first thing I would look at is the fib. From the very top, the previous highs, down to this pullback, the low that we had, and you will see we've done 100% retracement. So the next levels I'd be interested in on that retracement would be all the way up here. Now, bear in mind, we are looking at a monthly chart right now. So I'm not suggesting we are going to go up here anytime soon. But if we are going to extend over the next 12 months or beyond, these might be some reasonable targets to be looking at, okay? More short term, we can think about the exact move that it's in right now. So doing the same Fibonacci from this leg here to the low. Okay, and you will see the 161 is right near this 5,000 range, which was also on an adjustment top. Okay, so there's reason that I've left it there. So I have a sneaking suspicion that we will start drawing well up to this 5,000 range. If we break that and we want to do a measured move, it's quite a big push all the way up to 51.56. So I can mark this out as well as a measured move. Bear in mind, again, we are on a monthly chart here. The monthly chart is extremely bullish, okay? We always said on the month-to-month we were looking bullish as soon as we held this pivot and started to push up. So I'm going to go down now into a weekly and we can maybe start to talk about some other levels. So based on the weekly pullback, which is much more short-term, would be from this pivot to this pivot here. And you can see, yet again, the measured move is taking us up to just over that 5,000 range. So clear reason that we're going to dive up there. And also you've got the 161 here, 49.46. So you might as well call it 49.50. So I'm already making a mental note of where we might be able to extend to based on measured moves. And the other type of fib that we can do instead of just these extensions would be right here. Okay, so this will be very, very similar to this pivot and down. And again, lots of confluence into these areas. So This is the pocket I'm really going to look for us to extend into first, all right? Into that 5,000, and I want to see how we start to react there. Now, does that mean I'm going to be getting short there? Absolutely not. There is absolutely no reason to be looking short in this market right now, okay? And there hasn't been a reason at all since we broke out this supply. If you wanted to attack this supply back here in early December, that was a shot at it, maybe up here at all-time highs, but you are just gambling right then. I've been bullish this whole time, looking for this move up ever since this pivot down here. So that being said, do I want to be buying up here? I do not want to be buying up here, but we are now in a bullish market. So if you have not traded a long time, the last time we were in a market like this was during the COVID run, all right? During this huge bull run after we broke out the all-time highs. So anything from, let's call it November 2020 onwards, was a massive bull run, and we just continued to squeeze money as the Fed continued to print. So we might be in for a leg like that, like a push up on an extension, and then we're going to have to see what happens. So I am not looking to buy breakouts, right? I'm not looking to buy breakouts, especially right now, because there is a chance that this could be a failed breakout, all right? And if we're going to do a failed breakout move, then come next week, we're going to come right back inside. So I need to wait to see what happens then. The next thing I'll be thinking about is where could we pull back into. So based on this weekly chart, quite clearly, you could say we have a weekly order block in here. There's definitely, without a doubt, key levels back down here for these breakout points. So I want to be very aware of these levels here. And if we look at this current leg, that would be a nice 50% retracement, or a 30%, which would be the build of a flag. A very common thing to do would be to pull back to here and build out a flag for like an ABCD type move and push back up into all-time highs if it wants to go. So I'm very aware about this kind of move coming if we're going to do the failed breakout. That doesn't mean I'm looking short. It just means I'm aware of it, okay? I'm going to plan out all possibilities. Moving down into a daily time frame. Okay, so yet again, you can see the weekly is basically encapsulating this whole move. So we could refine this on a daily down to here. Okay, and we can mark out this liquidity left right here, just in case it wants to hunt for it. So if it was going to hunt for that, two things can happen. It hunts, stops out, and comes straight back inside. Or alternatively, it wants to do a deeper pullback, maybe continue to fill this gap, and then we see what happens in here. These are options. As I said, they are just options. It does not have to happen. Other levels, of course, huge levels down here, but this is a very, very long way away now, and I do not see this happening anytime soon, if at all, okay? That really does not need to do this move. So now I'm going to move into a 4-hour chart. And I'm going to go back to extended hours now. Zoom in a bit. And are there any imbalances or breakout points that I want to be interested in? Yeah, absolutely right here. This kind of level, and even those wicks above. All right, it's a big level. 10-point range, but that's an area that I'm going to be interested in, okay? Because this right here was really a giant squeeze running all the stops out, and we haven't really back tested it, because healthy moves always back test. So a back test would be coming back to check that this level is now flipped to demand and then move higher. So that again is something I am very aware of, okay? I need to be aware of this backtest region. This is the prime area that I want to get involved in if it's going to give me the opportunity. It does not have to give me the opportunity, but this is my discount range. It is a good range where I know buyers started to participate in to get this move up, and from here we are really talking about a squeeze. All right, so squeezes often like to give back very quickly, so it could be this would be a perfect scenario if that back test holds, but then we create supply in these single prints up here. We will do that. What do I mean by this area here, okay, even though so far it is held, that is buyers buying very high. Okay, buyers up here bought very, very high into the close on Friday, hoping that we could continue next week. That is not guaranteed, okay? So there is a chance for us to create range here. If we create range, I need to be aware of this move. So I can get long down here once it shows me it's ready to move up, but I need to be aware of this potential single print overhead supply. What does that mean? It's where the buyers bought late. So when we come and retest them, they might get out break even or for a small loss. That creates supply in the market, and then we can potentially wash over for a deeper pullback. Again, these are just theorizing potential plays. I am extremely bullish on this market at the moment. Do not get this confused. I'm just showing potential plays which might play out, especially Monday, Tuesday, Wednesday, based on the weekly model. Now, I'm going to give you good reason and thesis behind all of this now. I'm very interested right now in what the Dixie is doing. It's my belief that a lot of these moves are being stimulated by the Dixie. The Dixie is the dollar, if you don't already know that. And we have fallen off from the dollar, from these highs, all the way up here. And we are basically in range here, okay? We are in a range. And if the dollar continues to get weaker and come down towards these lows and they keep selling off, we are going to continue to pump the market, okay? The indices are going to continue to pump higher. It's important to note on the dollar where we are right now, okay? We are coming into discount range. So I need to see this start to get weak and buyers not start to participate in this sort of old area of demand here. If the buyers start stepping up in the dollar here and start trying to cause a potential squeeze higher, okay, which would be this move starting to base and come and retest these highs here, then we will have that sell-off that we had in September and October last year in the indices, okay, and we'll start to get weak again. So we are at quite a critical point in the dollar. So just zooming out to the weekly so you can see what I mean. We are on support, okay, and we have targets which we can aim for up here. These are old supply levels which we have tried to retest a few times. So I'm very aware of this midpoint in the dollar right now. I'm very, very aware that it can go one of two ways very quickly as well. The other thing that I need to look at here, which I pay attention to, are the bonds and yields. So where have we got these? So the 10-year. From a weekly standpoint, okay, the 10-year started to bid up last week, all right? It is starting to hold and potentially create a buy signal soon if it can start pivoting above. Now, as you will see, there are some imbalances here. There is supply left overhead. Now, this is only the 10-year, it's not the 30-year. I will show you those shortly. If we start to get bullish here on the bonds and yields, the market is going to struggle to pump. Okay, so you need to see these start to trend lower again. Same for all of these. They are pretty much in alignment, showing you the same thing. Okay, so it is unusual to see what we saw last week where we had this big push on a weekly and we had a big push on the weekly on all the equities and all the indices as well. That is not a usual thing to see. So I'm very, very aware of what we might do here, because you will notice the pump on the market came once we put this high in on the bonds. All right, once we put this high in and we started to fall off, that was where we had the pump in the market. This is unusual to have a week where we have started to close near the highs when you compare that to ES or the NQ on the weeklies where we're closing at all-time highs. That is clear divergence. That is not something you will regularly see. So we have to be extremely cautious and aware about these things. What are the other things, the other tools that I will look at to look at possible areas of demand, of support that we can come into? The next thing I really, really want to look at, which I haven't looked at for a little while, would be the anchored VWAPs. Okay, the anchored VWAPs of these key critical points. So let's just do all these as support, because I'm really not interested in sell signal anchored VWAPs right now. They're not going to help me. I'm looking for areas of support. So one here, we can do one here, we can do one here. And this one looks pretty good, doesn't it? So this anchored VWAP off the last low, remember these are weekly anchors, they are weekly anchors, comes right into that demand pocket. So even on a weekly, okay, even if we break down under this on a weekly and come into here, I'm expecting a lot. By this point, this is probably trended up as well. I'm expect a lot of buyers to be looking in here. Now, from that point in, we must put in a higher low, okay? It needs to put in a higher low versus this pivot, because if it does not do that and it starts to create range in here, you're going to know what I'm saying. We are starting to clearly build potential liquidity. Again, I'm in a weekly pattern. I'm not suggesting it's going to come all the way down here. I'm just saying we need to be very aware of the patterns at play, of where demand is, of what the Dixie is doing, of how the yields are working, and we also need to be aware of any news. Okay, news is what drives the market. I don't play the news, I use it as catalyst to make decisions on where I think the market might want to go, and then I'm looking for my best points to buy and sell. So let's have a look at the news drivers coming this week. So as always, Monday, 10 a.m. US leading economic indicators. Nothing major there. Nothing on Tuesday. Okay, so this would be really interesting for the weekly model. Where do we put that high and low pin on the weekly model? Because last week, the weekly model didn't play out. Like I said, it wasn't surprising because Monday, the market was effectively closed. All the ETFs were closed. No one was trading options. It makes a big difference. But here's where I start to get interested. Wednesday, we have PMI. Now, that's going to be a big driver. I'm really interested on the liquidity injection on Wednesday after we have already put in a Monday and Tuesday high and low of the week. So either we are going to have a failed breakout and pull back inside on Wednesday, or we are going to start to have an extension of a range already created. All right, so this is a big day for me, Wednesday, I'll be looking at. Thursday, absolutely stacked with wholesale inventories and new home sales. They haven't been moving it a whole lot recently. And then Friday, as always, big day here. PCE, core PCE, pending home sales, and of course, options closing out on Friday. Not as many as the last week. We don't have like the quarterlies, but the weekly options will be closing out. So this will be an interesting day. So Wednesday, Thursday, Friday for me, key days this week to see what we can do. I will be light on Monday and Tuesday while the market starts to make a decision. Do not be surprised if we get some form of pullback on Monday after trying to extend in the range and looking for buyers down lower. And then after that, we can really see where we start to base and what we might have ahead. It's very difficult to be buying high in a market like this. So you need to be waiting for the pullbacks to give you good chances to start entering in at good value. Because the last thing you want to be doing in this market is buying at all-time highs if it is in a manipulation phase only to come lower. So be very cautious of that. Look for areas of support like these zones that I've started to give you. Wait for the pullbacks to come into them. Do not just be buying breakouts expecting higher prices the whole time. We are clearly in a chip pump right now, but at some point the market will need to give a pullback leg. I will remind you, on a weekly chart, all right, we have absolutely pumped since October. There was one level of consolidation at the high which didn't come in even back test down here. So you need to be cautious, all right? Look for longs, but look for longs of good areas of value. If there's a clear shift and supply is starting to play out, wait for the retest. Don't be guessing the tops. Wait for the retest. Find good risk reward levels, and then you can start to look for that counter trend leg if you are a better trader. If you want to learn my setups, right, how I time these pro trend legs and counter trend legs, how I understand how the market wants to move, my course is on sale right now. The link is in the description. You can buy it right now for $299 using the code YouTube. I will take you from a beginner all the way up to an advanced trader in 20 hours. Okay, 20 hours. A lot of hard work in there, lots of details, years and years of experience put into that. And also, of course, Apex is on sale. Links up there. You can see it in the description. You can use my code right now to get 80% off. I think there is 10 days left or something like that to get the 80% off, and then the sale goes away. And I don't know when they will be bringing it back, because they have specifically said there will be less sales this year. So let's see. Until then, I hope this video has helped you. Wait for the pullbacks. Look for the rotation longs when it's ready. Hopefully you have a great week.